everyone who's joining us. Just a reminder, if you are not a member of the subcommittee, we ask that you keep your video turned off. If you have something to add, or if there's a question, then we will call on you. So please don't just turn off your mic and start talking. To members of the subcommittee, this morning we're going to be talking about Senate Bill 496. And as I know you all have been following it, this bill has been on a very fast track, partially because the need for it is urgent, partially also because people are starting to file their taxes. And this makes significant changes to the tax code that we want people as much as possible to be able to take advantage of. So you were emailed a set of amendments. I'm going to walk through in general terms each of the amendments and sort of what the bill will do now, and answer all of your questions. I will say, because we're on such a fast track, further amendments are going to be difficult. If there's something you feel urgently needs to change, then please talk to me and we can try to address it either in full committee voting session this afternoon or on the floor. But you know, this has been, we had a subgroup of members of the subcommittee. We've been having conversations with the Senate and with the governor's office to try to make sure everyone's on the same page here. But before I dive in, I do want to say a thank you to all the staff that have been involved. It's still early in session, and I got to tell you, I'm not sure how George Butler and Robert Rearman and all the DLS folks and the folks in the Speaker's office, how they got any sleep as they were dealing with this, and not just them. The Comptroller's office has been extremely helpful on this bill. Senate has worked very hard on it. Kiefer Mitchell and Allie Keene in the governor's office. So this is truly kind of a work product that I think a lot of people can be proud of. As the bill was introduced, it was generally a tax bill. The Senate added $520 million of additional spending to the bill, targeted at a wide range of programs. It's best to think of this as sort of three pieces: a spending piece, a piece targeted at individual support for taxpayers and families, and a piece targeted at small business support. And what I'm going to do is I'm going to walk through those one at a time based on how they're affected by the proposed amendments we have in front of us. The governor's bill, first of all, for individuals and businesses, for anyone who, for individuals, the governor's bill proposed an exemption of unemployment insurance taxes from income tax permanently. The background on this is that in the 1986 congressional tax reforms, Ronald Reagan and congressional Democrats tried to set as a basic feature of tax policy the idea that all income should be treated equally. And so that's the point at which unemployment insurance became taxed. The permanency of this raised some concern because this bill is intended to be a short-term bill. So what these amendments would do, what they propose, is that we continue to exempt unemployment insurance income from taxes for unemployment insurance received during 2020 and 2021. And then we cut it off. And the legislature could come back and extend that if we so chose. We also means test it so that an individual who made more than $75,000 or a couple filing jointly that made more than $100,000 would not be eligible for that exemption. So that's the individual unemployment insurance exemption. What we added in, and the major feature that I will tell you I was fighting for and that the House was fighting for, was a recognition that this pandemic has hit people unequally, that people at the lower end of the income scale have gotten hit much harder by both the pandemic and the recession. The governor in his bill proposed direct stimulus payments to families and individuals. They would have totaled, George, correct me if I'm wrong here, as originally proposed, for people that qualified for the earned income tax credit in 2019, a family would have received $500, an individual would have received $300. And then for a family that qualified for the earned income tax credit for 2020, the family would have received another $250. An individual, George, was it 100 or 150? We can't hear you.
It was 150 and 250.
Gotcha. So we took a look at that and said, as long as we're touching the EITC, which we know is the single best anti-poverty program that we have in government, let's really do something big with it. These amendments propose increasing the refundable earned income tax credit from 28% to 45%. They would make Maryland the highest EITC refundability in the nation, 5 percentage points higher than the District of Columbia, which would be the closest state to us. What that would mean, and that would be for 3 years. So this coming tax filing season, as well as 2 years after it. What that would mean for a family with 2 or more kids who's making, say, $25,000 a year, so they qualify for the maximum EITC benefit, is that under this amended proposal, they would receive a $500 check immediately, as in the governor's original proposal, if they qualified for the 2019 EITC. And then if they qualified this year, they would get a little over $1,100. And then next year, a little over $1,100. And then the year after that, a little over $1,100. So that family in total over the next 3 years would receive about $4,000 in additional support through the EITC. For an individual, as you know from Delegate Wilkins' bill, individuals under the federal EITC who don't have children receive a much smaller benefit. It's a little over $500. We would increase the state refundability as proposed in Delegate Wilkins' bill to 100%, so that their benefit would, in total, their federal and state combined benefit would double. They would receive an additional $500 a year. This is a significant increase, clearly. I will add my own editorializing that I think this will be the single biggest step Maryland has taken to attack poverty since the increase of the minimum wage to $15. George, am I missing any of the individual components? Okay. Are there questions so far? Delegate Polakovich-Carr?
Thank you, Mr. Chair. Thank you for the explanation. In terms of the individual payments, is there anything for folks who are I-10 filers who aren't citizens, since the EITC doesn't include those people?
It's a really good question. And I'm going to tell you bluntly and personally, that is, I think, my biggest concern about this bill. That's not to say I don't think these amendments are good amendments and we shouldn't go forward. But the federal government has had a policy of cutting I-10 filers out of most benefits. So let me say this. The stimulus payments, the $500 and $300, are based on the federal EITC. That's an earned income tax credit, which means these people are working and they are paying their taxes. But the federal government forbids I-10 filers from participating in the EITC. And as a result, under this bill, as currently written, I-10 filers would not be eligible for that $500 and $300 payment. And you know, I think if we don't deal with it in this bill, then I think we should certainly consider passing separate legislation to create a parallel program. Bluntly, you know, the federal government has forbidden I-10 filers from gaining access, in part because undocumented immigrants are included among I-10 filers. The same undocumented immigrants that haven't been eligible under the CARES Act aren't eligible under unemployment benefits, aren't eligible under most federal benefits. It also, because tax law and immigration law are not perfectly aligned, catches up a lot of people who shouldn't be affected, including legal permanent residents. So, you know, that is bluntly a flaw in this proposal. Delegate Feldmark.
Thank you, Mr. Chair. My question was actually about the same issue. And, you know, I appreciate that we are following a federal program here and that limits us to the federal guidelines. But I believe and I hope that Maryland can do better than the federal government in this regard. And I understand the urgency of this bill, but that urgency is really strong in our immigrant community too. So I hope we'll figure that out and find a way to get folks who are working and paying taxes and deserve this relief as much as citizens do.
Appreciate that. Delegate Ivey.
Thank you, Mr. Chair. And just to echo the sentiments, you know, these individuals collectively have paid over $100 million in various forms of taxes here in the state of Maryland. So everything that we can do to include them in this specific piece of legislation, I really hope that we can take some time after this subcommittee meeting to figure out if we can do something before we vote in committee.
I appreciate that. I think, what I'd like to do just process wise, and, I'm asking
Sure.
this as a favor from members, because, I'm big on process and normally I want
Absolutely.
to walk things slow so everybody has a voice. I think for our purposes this morning, we need to move something out of subcommittee.
Yep.
We can try to continue having conversations about this I-10 issue. Whether it's trying to find a fix through this bill or a separate bill, I'm dedicated to finding a fix. I will say that if we choose to have that conversation in a separate bill, there is a vehicle for it, which would be Delegate Polakovich Carr's child tax credit bill, which we could use to try to do that. But I appreciate everybody advocating for folks that desperately need help. Delegate Barnes?
Yeah, no, thank you, Mr. Chairman. And I was going to say that, I concur with what you just said, that I think, because of the importance of this bill and the hard work that we have put in thus far, that we stick with the committee. And I think, as Chairman Lukey has just indicated, that we look at Delegate Polakovich Carr bill as a vehicle for creating another opportunity. But I think for the purpose of today and the importance of this bill and trying to get it out, I think we are making some huge improvements and still helping a whole lot of people. And not to say that we can't help them in other ways, but I think for this exercise, I think we're moving in the right direction. And I would just echo that we all support that endeavor in getting this out of committee.
Thanks, Delegate Barnes. Delegate Long? You're muted, Delegate Long.
Thank you. I just want to clarify something. Originally in the governor's bill, there was going to be an exemption for paying state taxes for unemployment for everyone, correct?
Yeah, so we are keeping that. We are limiting it to 2 years, and we are means testing it. So people that make over 75,000 as individuals or 100,000 as joint filers wouldn't be eligible for it. But the vast majority of people that collected UI benefits would still qualify for all of the unemployment insurance payments from 2020 and all the unemployment insurance payments from 2021.
Well, the only question I would have is that people that are working $75,000 for individual, $100,000 per couple, now they're drawing unemployment. I would think they would probably be the most ones that's going to need to help with the tax breaks.
So just to clarify, these are people that even with a period of unemployment still made over $75,000. These aren't people whose income dropped below $75,000, right?
No, that's what I'm saying. So let me clarify. So you're saying if someone before they got laid off, per person was making $75,000 and a couple was making $100,000.
No, I'm saying after they got laid off, they made still over $75,000. Right?
Oh, okay. That clarifies. Okay, thank you.
Yep. Other questions on the individual section before I move to the business section? Okay. So the governor's bill came in with a number of business-related proposals. One of them, two of them actually are continued untouched through the Senate version, and these amendments do not propose to touch them either. The first of those would exempt from taxation any grants or loans that businesses received that were forgiven, right? Normally under our tax law, forgiven debts is considered income and you have to pay taxes on it. This would say they don't, on any pandemic emergency relief programs, they don't have to pay taxes on it. The second piece relates to MSBDFA and minority businesses. So MSBDFA is set up as a semi-independent authority, and as a result, they need specific language, essentially statutory authorization, to forgive some of the loans that they've been providing minority-owned businesses. So we are providing that in this bill. It was in the governor's original bill. We would continue that. The governor also proposed his single largest source of support for businesses in this bill was what's called a sales tax vendor credit. Under a sales tax vendor credit, a business that collects sales tax does not have to remit all of the taxes that they've received to the government. So basically, they can keep some of what they collect as sales tax. Under this amended proposal, we would keep the sales tax vendor credit, but reduce it by a month of benefits. So a business collecting sales tax that collected less than $100,000, or that had less than $100,000 of income in a given month, would be able to keep up to $3,000 a month of that sales tax for a total of $9,000 that business could hold on to. They would not have to pay that back. That is money that could help sustain them through what I hope will be the reopening period of this pandemic. The House also added a new proposal, is proposing to add a new proposal that is the largest by dollar amount proposal in this bill. In order to understand this, you got to understand a little bit about unemployment insurance. So the unemployment insurance systems, as you know, have been deeply stressed by the pandemic. There are a lot of people who are collecting benefits. Unemployment is funded through the UI Trust Fund. The UI Trust Fund is funded by employer taxes, and those taxes vary depending on essentially how much money is in the trust fund. When there's a lot of money in the trust fund, those taxes go down. When there's not a lot, they go up. And also based on what's called experience rating. In other words, as a business, have you made a practice of laying workers off, right? And if you have laid off a lot of workers, you're going to pay a higher unemployment insurance tax than somebody who hasn't. The governor's proposal proposed one change in how we do UI taxes. And it essentially would have extended something that I believe they've already been doing through executive order to give people a 2-year break from that experience rating issue, because so many businesses were laying people off, not necessarily because of bad business practices, but because they were told they had to close, right? We are proposing something larger. The federal government, in order to help out UI trust funds, has been lending money to the states at an extremely low rate of interest. So what this proposal would do is propose that all businesses in the state with 50 or fewer employees that want to participate would be able to defer their unemployment insurance taxes for a significant period of time. George, it ended up on 3 quarters?
They would be allowed to defer payments on the first 3 quarters of 2021. Those payments would be due at the date that the Q4 payment is due, which is January 31st, 2022. You would want that to occur so that they can maintain the federal FUTA credit for timely payment.
So essentially, the way to think of this is this proposal gives any small business or nonprofit in the state the opportunity for a year-long interest-free loan on their unemployment insurance taxes. I will also say that given all the action in Congress, I am hopeful that Congress will forgive part or all of some of these loans. And if that's the case, we would be able to just forgive these taxes. But that's a longer term thing. At minimum, this is a year-long interest-free loan to any small business or nonprofit in the state of Maryland. And the beauty of it is that if every business and nonprofit in the state that's eligible were to take advantage of it, you're talking about close to $1 billion that they'd be able to keep in their pocket for the next year. And the cost to the state is $20 million, because all we'd be paying is the interest on the loan. So I will say that brainstorm by folks on the Economic Matters Committee and Matt Jackson, I think, is kind of brilliant. And it's part of the proposal in the bill. So let me pause here and answer any questions about any of the business supports. Delegate Ivey?
Thank you, Mr. Chair. And I agree. This is a really significant piece of legislation here. Just wanted to speak on the equity piece here, making sure that the money isn't all going in one geographic direction. It's as evenly dispersed as we can make it. I bring it up because we had some issues with this over the summer with a similar sort of grant program.
Yes. And actually, one of our goals in crafting this was to try to, as much as possible, make sure that people didn't have to apply for these benefits, that they would be as automatic as possible, because part of the issue with equity is getting the word out, right? Yep. And then the application process. And I've seen that in businesses in my district, right? So, I think doing it as much as possible the way we've done it, where everyone gets to apply, will result in where everyone gets it without having to apply in most cases. gets much closer to both geographic equity and, frankly, equity in terms of minority-owned businesses and women-owned businesses who missed out on some of the grant programs.
Absolutely. Thank you.
Yep. Delegate Feldmark.
Thank you, Mr. Chair. So I think this makes a lot of sense. I want to just clarify, I know one of the concerns with the original bill was the sort of lack of assistance or less assistance for businesses that don't collect and remit sales tax. So I think employment deferral is a good way to reach everyone. I just want to clarify, so for businesses that don't pay sales tax or that don't collect and remit sales tax, the assistance that's available to them is the UI tax deferral and the tax relief on any grants or loans they may have gotten.
Yes, and so
is that pretty much what covers them?
Yeah, that's correct.
Okay.
The House position had been that we wanted to try to push to make sure all businesses and nonprofits could find a way to benefit from some of these changes. In negotiations with the governor's office, the governor felt strongly in retaining at least a portion of the sales tax vendor credit, because I think he would argue it keeps more money in pockets now, even though it's a smaller set of businesses. So essentially, what this represents is a bit of a compromise between those two positions.
Can I just, as a quick follow-up, and maybe this is more technical, but for nonprofits or other folks who may be paying UI as reimbursing payers instead of the taxes quarterly, does this offer some relief to them as well? Like, how do they fit into the deferral?
George, go ahead.
The deferral also applies to reimbursement payments. And in addition, I also want to note that in addition to allowing the businesses to elect to defer for Q1 through Q3 of calendar 2021, the Secretary of Labor is also authorized under the bill to do similar deferrals for calendar year 2022.
Thank you.
Any other questions on the business section of the bill? So as you'll recall, the Senate version of the bill added about $520 million of spending in a broad range of categories. In conversations about what the impact is of these changes that the House has proposed, the House and Senate have been talking. We have reached essentially agreement on a smaller set of investments that I believe will ultimately total $296 million. Those are being handled through the Appropriations Committee. My understanding is that there will likely be a supplemental budget to fund them. And they, again, they touch on a wide range of things, and I'm sure our friends on appropriations would be happy to talk through it with you. For our purposes in the House, I'll tell you, Delegate McIntosh was pushing hard for programs that directly help people. So the final product that they've negotiated with the Budget and Tax Committee will include, I think, close to $90 million in utility assistance, significant new money in housing, in food, in some education priorities. Again, our position in the House has been, let's provide targeted aid to people and businesses that need it, and we've done that as well in the appropriations portion of the bill. Delegate Ivey.
Thank you, Mr. Chair. And I know that we're not going to be going over this piece here in this subcommittee, but ensuring that we increase aid to our local food banks as much as we can, is such a significant issue in Prince George's, in my district specifically, where we've had so many different food drives going on for months at this point. And we're also finding that people are running out of food to give out, but there's no shortage of individuals who need the food. So just voice that as well.
There is money in the proposal, I believe, for food programs.
It was $10 million for the food bank as what came over from the Senate.
Yeah, I believe it stayed the same.
Yeah, absolutely. That's what I'm advocating for, increasing it from 10 million.
We got you. Delegate Buckle.
Thanks, Eric. I apologize for being a few minutes late. I had to take a business call, but just in particular, that 296 instead of, I think it was 520, I think was the score for the sentence thing. Can you get us, I know you may not have it now and appropriations will vote on it separately, but it's certainly going to be part of the debate or the discussion about the bill. Is there any way that the analysts or you guys can just produce a document that just says, hey, the 296 million is this, 90 million for utility payment supports, X for, whatever it is. Is there any way we could get that today before, so we can explain it to other people? Because we'll be asked, what is that 296 million as opposed to the 520?
I think we'll be able to get you something.
Okay. I mean, George is really good. I'm sure he probably could just whip it up in like 30 seconds, maybe 45 seconds.
George at this point needs IV caffeine. I don't think he slept last night.
It's good for you every once in a while. He's young. All right. Yeah, if you could get us something on that. I mean, I don't have any opposition to it. I just don't know exactly what it is. Mm-hmm. Helpful for us to be able to communicate to other people what got cut, what got changed, what's still there from an important standpoint. Thanks.
Yep. I will also add that in the amendments, there are a number of technical amendments related to a number of issues. George has been working closely with the Comptroller's Office, drafting a series of amendments to address processing issues and things like that. The most significant technical amendments in the bill actually relate, and they would have been in a separate bill, but it's easier for the Comptroller's Office if we get it done now. They relate to the PTE exemption that we passed last year at the very end of session. You'll remember that we kind of hurried that bill through to give small businesses a break from the federal changes to the state and local tax deduction. Comptroller's Office needed some technical addition modification language to make it revenue neutral, which was the legislative intent. And that language is in the bill as well as sort of a technical correction before the Comptroller's Office starts processing tax returns. So we could get that done as well. George, what did I miss?
I believe you covered everything, sir. One thing that I would note with the PTE is that the credit will be claimed against both state and local taxes. However, revenue will be distributed from the tax so that counties are held harmless in that regard. I believe that everything like I said, I believe you've covered everything else.
Hey, great.
The amendments do reflect amendments that were provided by Department of Labor, provided by the Comptroller's Office with respect to some of the other existing components of the bill to clarify ambiguities and ensure that the intent has been captured.
This is, I think, one of those rare moments where pretty much everyone in Annapolis has been pulling in generally the same direction. And it's required a tremendous amount of work. I think, we still have some ways to go on it, but I think we can be proud of the product that the House helped produce here. Delegate Buckle, did you have an additional question?
I did briefly, and I may have missed this, and again, I apologize. I'm looking at the bill, the amendment, the EITC, it looks like we're just, rather than increase the payment amounts, we're changing the indexing percentage for the EITC. Yes. So that, do we have a score on that I missed in terms of, is it getting more people, or are people at a certain level getting more money instead of the 500 or 350?
Yeah, so we'd increase the refundability for the family EITC, the EITC for people with children, from 28% to 45%. For a family, just as a sample, for a family with 2 or more kids making $25,000 a year, that would be an additional $1,100 a year. We're also increasing because the federal EITC benefit for individuals without children is so low. They're at only like $500. We've essentially, if you remember Delegate Wilkins' bill on the EITC a couple weeks back, we're incorporating that bill in here, and that would match the individual income at 100%, which would give them an additional $500 a year or so.
And that's the one I'm looking, George, if you're listening, I'm looking at page 7 of the amendments. That's the one that caps out at $530 for a taxable year. Is that what you're talking about?
Yeah, and the reason we did that is we're doing this 100% under the assumption of the current credit amount. President Biden has just proposed increasing the federal credit amount, which would of course have significant impact then on the state because we build off of their credit. So in order to make sure that any federal action doesn't unintentionally significantly increase the fiscal impact of this bill, we set a number as well.
Okay. Do we have an analysis of what that will be? Like, you know, in the original bill, in the original fiscal note, there's a breakout of the UI deductibility is X amount estimated. Do we have a breakout for what the EITC will change into now that we've increased the credit?
You mean for the cost of it, the
Right.
fiscal impact? So George, we don't have new numbers, do we? It's in the range of, George, correct me if I'm wrong, I think it's in the range of about 250 million a year.
Okay. So that wasn't that different than what it was in the original Hogan bill, was it?
It's no, except that this lasts 3 years from the, including this year.
Whereas his was a more one-time, well, 1.5 year payment.
Yeah, well, and then he made the UI benefit permanent.
And we're eliminating, that's not going to be permanent for us.
We're doing it over 2 years.
Right. So the UI benefits will be deductible not taxable, but only for 2 years. It won't have a long tail, which I frankly agree with.
For 2 years, and it's means tested.
At 75 and 100.
Yes.
Which that's fine. I can explain that. That's reasonable. George, you had mentioned something about, I know that the counties seem to have only expressed a concern about that unemployment insurance tax deductibility or waiver of taxes on it, that they thought that would hit them through the piggyback tax as well. Did you say something about that, George, about we're holding the counties harmless, or was that in a different context?
It was in a different context, sir. That was with respect to the PTE bill from last year.
So we are aware of the issue from the counties. MACO and the counties have contacted us about it. The means testing does reduce somewhat the fiscal impact on the counties. There is still a fiscal impact. And Chair McIntosh and the Appropriations Committee have been having conversations about how to help counties deal with that fiscal impact. And there are a number of options, not the least of which is, should the next federal stimulus pass that, you know, all of us have been advocating for, you know, it does include, as of right now, direct aid for local governments.
Okay. So there's a backfill. I mean, that's not a bridge to die on. I mean, everybody's taking a hit, from people working 3 jobs to companies to state, everybody's taking a hit. So, okay. I just wanted to clarify that. Thanks.
Are there any further questions? Secretary Schultz, did you want to say something?
I did, and I'm not exactly sure if this is the appropriate time,
Go right ahead.
Chair, but I do want to thank you for allowing us to be here today, for you and the members of the subcommittee, because this is really important. Because I don't have the copy of the amendments that you are all looking at, I just want to state a couple of concerns that I had based on the Senate amendments, and I don't know how that translates to the House amendments moving forward. But the department really is desiring to address the intentions of the legislature. And so some clarification on that would be very beneficial. And for example, the Senate amendments talk about distributing the MEDAF funds for the additional grants that are going to go out based on a need basis. And that's very subjective. And so I think our program has not been set up on a subjective need-based approach. As you all know, we've briefed you frequently on the first in, first out. So if there is a general guidance for the department to be able to assess the need base, is it protecting the number of employees? Is it a total loss of revenue within a 12-month period? There's a lot of metrics that can be achieved through that. And I think that if we understand your intention with that, then we can certainly move forward with that.
Sure.
The other part of that is, with that need-based assessment, because our systems at the Department of Commerce had not been set up for that, we will have to look at the prolonged effect of analyzing every application that comes in based on that in a comparative status. So understanding we want to get the funds out as quickly as we possibly can. The 4-month time frame and the gearing up our internal processes and procedures to review specifically each and every one of those applications is going to take a little bit of time. I just want to be able to set the expectations for that. And additionally, I think that in order to be able to get the funds out in a faster manner, when we're talking about the restaurant relief, if that and the hotel relief is still included in the House amendments, it has been a very good process in order to be able for the department through our MEDAF program to re-grant those funds out to the individual jurisdictions and place some types of requirements on them as far as eligibility requirements, et cetera. And that has, you know, obviously getting 24 jurisdictions to do the brunt of that work has been very beneficial at this point in time. I just wanted to bring that to your attention. We want to be able to get the funds out as quickly as we possibly can, but we also want to be cognizant of the fact that there will be a change in procedures that we will have to go through in order to be able to accommodate the new terms.
Sure. George, so much of the language, guidance language about the grant programs, is that now going to be in the supplemental?
I can't speak specifically. I can say that currently Senate language generally was not modified to address these matters.
Okay.
And additionally with that, George, if you're looking at some of the technical capacities, there was language where it had said that we would honor those businesses that had not received state funding in the past. And so I just want to be able to make sure that we all know here that the state funding has gone to the local jurisdictions as well. So is the intent that they would not have received a grant specifically from the state level, or the money that has come from the state to the local jurisdictions? Because there's not much of a difference, because it was all state funds, mostly rainy day funds at this point in time, that are going down to the local jurisdictions. So if you're looking for those businesses that have not received any grants or loans from the state, that'll be something that we're going to have to clearly identify the intent of the legislature.
Well, Madam Secretary, why don't we do this? We'll share the amendments with your office so that you can dig through them as quickly as possible. If we're able to adjust any of the language in ways that would be helpful before it passes, we will certainly do so. We can also find other vehicles as necessary if we need to do any corrective work. But we'll get that over to you and Rhonda in your office as soon as possible. Does that work?
That's perfect. Thank you so much. I appreciate the time.
Thanks for joining us, Madam Secretary. Are there other questions? If not, I'll entertain motions on the amendments.
That's it.
Make a motion that we go ahead, Jason.
Sorry, Delegate Buckle, what'd you say?
I said, that's it. Bill fails. One of a motion. Daryl Barnes will really make the Washington Post now. Be like, Barnes didn't motion the bill. Done.
All right. Come on. Who wants the honor of moving the largest anti-poverty program in state history?
Mr. Chairman, I look forward to us extending some relief for our undocumented residents of our communities as well. So I take you at your word and look forward to getting that done. I move the bill forward, move the amendments.
Second.
All right, so it's been moved and seconded. Is there any debate? All in favor say aye.
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 Any opposed? On the bill as amended, is there a motion?
Move the bill.
Second.
All those in favor say aye.
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 Any opposed? The bill moves unanimously. We will see everyone at 1 p.m. for the full committee voting session. Thank you, everybody, for the discussion and the questions and the advocacy and the hard work that everybody's put in here. I really appreciate it. I don't think I've been, this is great work. So thank you to everyone.
Thanks, Eric.
See you at 1.